Well, consumer and producer prices retreated last month. The federal government's consumer price index fell 0.4%, a monthly descent unseen since December 2008. The producer price index declined 0.7%, its biggest monthly drop in 3 years. The consumer prices also fell for a second straight month. The last time that happened was in late 2008 as well. The core CPI did rise 0.1% in April. The yearly gain in the overall CPI was just 1.1%.
The University of Michigan's initial May Consumer Sentiment Survey came in at 83.7, its highest level since July of 2007, 7.3 points above the final April mark. After falling 0.2% for March, the Conference Board's index of U.S. leading indicators rose 0.6% for April. Census Bureau data showed retail sales ticking up 0.1% in April and 3.7% in the past year.
While the year-over-year increase was over 13%, housing starts plummeted over 16% in the month of April, largely due to an almost 40% drop in apartment starts. On the other hand, last month brought a 14.3% rise in building permits, marked by a 40+% jump in permits for apartment construction.
The S&P 500 now on a 4-week winning streak. It rose another 1.98% last week to settle in at 1666 on Friday. Complementing that 5-day gain, the NASDAQ went up almost 2% last week, while the Dow Jones also jumped a little over 1.5% on Friday's closing bell. The NASDAQ settled in at 34.99, the Dow at 15,354. A truly impressive factoid. The NASDAQ and S&P have gained 1% or more each of the past 4 weeks.
Looking ahead at this week, earnings season continues. On Wednesday, the National Association of Realtors releases its report on April existing home sales. The Federal Reserve releases the May 1st FOMC minutes, and Fed Chairman Ben Bernanke testifies before Congress.
The Census Bureau report on April new home sales appears on Thursday, along with March FHFA Housing Price Index.
And then Friday offers the April Durable Goods Orders Report. That's what we're looking at this week. My name is Eric Hagen.
And I'm Greg Petrie.
We'll keep our finger on the pulse of the economy and report back to you next Monday.
So please feel free to subscribe. We'll talk with you then.